Good evening. My name is B.B. Sravani Lakshmi. I am from Tutorial Group 5 of subject HI 5020 Corporate Accounting. As a part of my individual assignment, today I am going to deliver my video presentation on the topic Issues in Cash Flow Statement. This assignment is consisting of two parts, Part A and Part B, where Part B is consisting of three sub-questions. In the Part A, I am going to explain about the statement of cash flows and the income statements. We all know that corporate accounting plays a prominent role in the context of business organizations. Statement of cash flows shows the financial position of the organizations. Not only that, in order to get the better investment returns, we need to ascertain some financial records which are related to the cash. So to ascertain those financial records, we need the information related to the sources like decrease and increase in the liabilities and assets and profits from the operations and so on. So this process is done in three activities, that is operating activities, financing activities and the investing activities. And coming to the income statements provides the information on revenues, expenses, gains and losses and the administrative expenses as well. Income statement provides the information of profit or loss of the accounting period related to the particular organizations to the managers and the investors. For the managers, it will be useful for them to improvise the unperforming sectors of the company, whereas for the investors, it will be useful for them to take the decisions related to the investing activities and also to find out the future risks and to take the decisions regarding that. In one word, income statements provide a clear picture related to the profits and losses of an organization, which will be useful for the investors to identify the future risks. So for that purpose, they need the statement of cash flows and the income statements. Coming to the part B, we are going to analyze the financial reports of three organizations named BHP Limited, Santos Limited and the Fantastic Limited, in order to gain more knowledge related to the issues in cash flow statements. So there are sub-questions from A to L in the first questions. In order to make sure that I am not going to miss any of the following questions, I am going to see the questions from my personal computer and refer my notes while I am explaining my key findings. So coming to the first question, the major sources of the cash flows for the three organizations are: for the BHP Limited, it's cash from the operations, dividends received and payment from the customers, proceeds from interest bearing liabilities and from non-operating cash and subsidies. For the Fantastic Limited, it's payment made by the customers, earnings received from the previous investments, proceeds from borrowings and from the sales and subsidiaries. For the Santos Limited, the sources of cash are payments made by the customers, withdrawn borrowings, dividends and interest, and the proceeds from the non-current assets and non-cash subsidies. All these three organizations are using the cash for the following purposes. BHP Limited is using the cash for increasing its working capital, where the Santos Limited is using the cash for purchasing new assets, clearing its debts. Fantastic Limited is also using the cash for the same purposes, but along with that, it's also using the cash for acquisition of tangible assets and also for the issuing of new stock. And coming to the question B, the trends in cash flow from operations for each firm are: BHP Limited is doing relatively good, though it coincides with the larger debts in the beginning of the years like 2017 and 18. In the coming years, it went on increasing its capex rate as well. And the Santos Limited is also doing good by generating high OCF, whereas the Fantastic Limited net income is low and also it has less OCF due to the less investments. Coming to the next question, the difference between the cash flow from operations and the net income and net profit after the tax is due to the exclusion of non-cash assets. From the part D of the first question is from the part B. First question, the sub questions from the part D all are related to the trends trends that are related to the three organizations in terms of capital expenditure, dividends, working capital, and the OCF and all. So as it required the numbers to compare everything for the 3 years 2017, 18 and 19, I have written that everything clearly in the form of numbers in my written report. So on a conclusion note of the related to these trends of these organizations, I can say that BHP Limited is able to pay its capital expenditures and with the dividends when compared to the past 2 years. Means in the 2017 it couldn't meet the capital expenditures and the dividends, but later in the 2019 it was improved very well. And Santos Limited is every year it's growing year by year, like the BHP Limited only. But Fantastic Limited's payoff related to the capital expenditure and the dividends are very less because of the low OCF, and this low OCF is because of the net income from the credit sales or the normal sales of this has been declined from the past 3 years, where the situation is very worse for the Fantastic Limited. The management is facing the hard position, like they need the external help from the others. So the factors that are affecting these three companies are, when coming to the BHL Limited, it's the smaller debts and the expenses incurred on new explorations. And for the Santos Limited, the factors are cash used on new explorations and the finance cost. And not only that, the royalty is also one of the factors that's affecting the Santos Limited. And for the Fantastic Limited, issuing of new stocks and amount invested on the acquisition of tangible assets. After analyzing the financial reports of the three organizations, my key findings related to the financial strengths of the organizations are: BHP Limited is capable of growing operating cash reserves, and it has also provided the cover for capex and dividends as well. The situation improved constantly as it met the dividends and the net borrowings along with the increased OCF. With the increased OCF, the organization has declined its financial reserves, its financial leverages by paying off the debts of the past years. Not only that, the company incurred more profits, and the investment rate was also good, means it can repay back at the time of crisis. And Santos Limited is small when compared to the BHP Limited, but it's still doing good in acquiring cash from the operations, and the long-term investments made has cleared its debts as well. But coming to the Fantastic Limited, when compared to the other two organizations, the net income of the Fantastic Limited from the credit sales or the normal sales has decreased in the past 3 years. So there is a decline in the OCF as well, and it doesn't cover the capital expenditures and dividends. Even the company is in the worst situation, where the management are facing hard for the survival of the company. So it needs the help from the external sources. So when the companies are evaluated for the lending purposes, BHP Limited has the positive vibes, means as compared to the other two companies, BHP Limited's operating cash reserves are high, the OCF is high, and it's able to meet all the capital expenditures and the dividends. Not only that, the major thing is that the repaying power of the BHP Limited is very high when compared to the other two companies. So I can state that when the process is related to the lending purposes, BHP Limited has more chances when compared to the other companies. So finally, I want to conclude that after observing the statement of cash flow and the net income statement of these companies from the years 2017, 18 and 19, BHP Limited is doing consistently well, and the Santos Limited is also doing good when compared with the Fantastic Limited, but not as good as the BHP Limited. But Fantastic Limited has, due to the negative balances, it's running with low OCF and it's not able to meet all the capital expenditures and the dividends as well. Thank you.